an example, property taxes in parts of the country. These are things that you need to account for, and that those costs might change as you go through retirement.
Yeah, I mean, some of them are easy to identify. Like, yeah, insurance costs have sure gone up a lot, and maybe they'll continue to do so. Electricity costs are another one. The others, though, are much more difficult to quantify. Like, I currently snow blow my driveway. How much longer will I be able to do that? How much longer will I be able to climb up the ladder and clean the gutters? Like, these are really complex questions that you need to very much think through as you age in your home.
Our guide is titled Owning Real Estate in Retirement, and there are two ways to request it. The first is by calling 800-393-4001. The second is by going to armstrongadvisory.com. Again, the guide is titled Owning Real Estate in Retirement, and you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mark Varner is the CEO of Veterans Development Corporation. Mark faithfully served his country from 1981 to 1984, and we're thrilled to have him as a partner and presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family that includes his father Victor and brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and it's one of the main reasons he chooses to give back to this special community. Mark is honored to continue the legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the Disabled American Veterans Department of Massachusetts. You can join Mark and help our great American heroes today by making a donation to support the DAV Department of Massachusetts. Please visit DAV5K.Boston. That's DAV5K.Boston.
Estate planning doesn't have to be complicated. Cushing & Dolan's new guide, The Simplicity of Joint Revocable Trusts, shows couples how to stay in control, avoid probate, and help protect what they've built for their family. Call 866-848-5699 right now and ask for your free copy today. That's 866-848-5699. Or request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit DAV5K.Boston. That's DAV5K.Boston.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck Mike Tucker with you here today on what might be the one and only ever Jobs Thursday, as we have the jobs data for the month of September. It was released at 8:30 a.m. Eastern, and while it is, an extra month out of date, I do think it still is, worth discussing just because it gives us a more current picture of the labor market than the August data. What we saw was 119,000 jobs added for the month. Despite that, the unemployment rate ticked up to 4.4%, and actually the unrounded number just a whisker shy of being 4.5%.
A whisker, you say?
A whisker, yes.
Not a hair.
The unrounded number was 4.44, so you were quite literally 0.01% away from it being 4.5. And so I think it's something where it's a jobs report that has something for everyone, depending on what your point of view is on the economy. If you believe that, or if you want to believe that we're starting to see an inflection up in job growth, this gives that to you. This also, by the way, matches what we have seen from ADP, who, remember, ADP is now publishing weekly 4-week moving averages of what they expect job growth to be. And ADP also showed an uptick in job growth towards the middle and end of September as well. So this matches, pretty closely what we saw from ADP. Subsequently, ADP's numbers have worsened in recent weeks, but it's a couple different sources telling you, yeah, there might have been something going on in September that helped job growth. The other side of the story is, okay, so you had this job growth, but the unemployment rate ticked up to 4.4%. If you're someone who believes, hey, the economy's weaker and the Fed should be cutting more rapidly, that jump to 4.4, almost 4.5%, gives you some data in your camp where you can say, yeah, maybe the Fed should be cutting in December instead of trying to put the brakes on it. So I think overall, again, even just in the headline numbers, unemployment rate and jobs added, you get, some different pictures in terms of what this report is saying.
You do. I think a few things to really stress about this report. First and foremost, the data collected 60 to 70 days ago. It is fairly stale at this point. It is pretty old data that we are talking about when it comes to this jobs report. It would have been released about 40 days ago, but again, government shutdown. This data is fairly stale in terms of looking at. But to your point, we saw a reversal in job creation, which had been, had been really weak throughout the summer. The unemployment rate piece, when you pair that with a strong job creation number, does not concern me all that much, right? If this had been 20,000 jobs created and unemployment ticking up to nearly 4.5%, yeah, you start to get a little bit concerned. With 110,000 jobs created and unemployment at 4.4%, I'm not immensely concerned about it. To me, this jobs report, one, because of its, because of the fact that it's old, two, because of the fact that it was not dramatically bad, I don't think does much to change anybody on the Federal Reserve's opinion of where this labor market is and therefore what they should be doing at that December meeting.
CME Fed Fund futures basically have moved a little bit today, going from a 30% chance of a rate cut at the December meeting to a 43.8% chance of a rate cut at that December meeting. So the market kind of saying the same thing, like, yeah, maybe there's a little bit of a stronger chance, but not much. Look, here's the thing. Let's actually get more into what this report said, and then we can talk about the Fed after.
Sure.
So, in terms of stuff under the hood, again, let's kind of do good news, bad news. Here's the good news. Long-term unemployment in September dropped by 116,000 people. Unequivocally good news.
Yep.
Like, you don't want to see people unemployed for longer periods of time. That is good. Also, part-time for economic reasons. Basically, people who are part-time because they could only find part-time work or their business was not giving them enough hours, that dropped by 170,000 people. Again, unequivocally, good news. Fewer people saying that they're part-time involuntarily is a good thing. Bad news. Unemployment rate for women rose by 0.4% for the month.
It's a big jump.
I don't really know what to make of that. That is a massive jump in 1 month. And we're going to need to see how the next couple months come out because you don't normally see a move like that. So that's a little unusual on that side. Another one that's kind of like, eyebrow raising. You look at it and you go, Asian unemployment jumped by 0.8% for the month. That doesn't quite that's a huge jump in a month. It went from 3.6 to 4.4%.
Yeah.
So let's, again, I know that these smaller subsets can be noisy, but okay, you look at those and you're like, okay, what's going on here? This is a little strange. Other things that still aren't great news. Manufacturing employment fell for another month, down 6,000 jobs over the course of the month. So despite the push to try to, really revitalize American manufacturing, it's not showing up in the jobs data here.
Right.
Other things that are notable in here. When we look at aggregate payroll growth, basically the combination of how many more people are working and how much more are they making, it's running at 4.6% year over year. That is fine. My general metric is as long as it's above 4 and below 6, you're in a pretty good spot where growth is going to be strong enough, but inflation is unlikely to be too high. And so 4.6 is towards the lower end a little bit, but it is something where, again, like you look at the trend that we have here on this series, because, again, the trend is what matters. Like, how are we moving directionally? And there was a little bit of a downtick over, from April through August, where it went from like 5.25% down to 4.5% aggregate payroll growth. This bumps that back up a little bit and maybe says, okay, could you find a bottom in the mid 4s? That would be totally fine. Like, that's good news if you end up seeing a bottom there, but this is one data point. So I think that aggregate payroll number is good to see that it didn't worsen. Like, it's good there. U6, the underemployment rate dropped from 8.1% to 8%. Again, another good piece of data there, that there are fewer people saying that they are underemployed. This largely is pulled from, people who are part-time for economic reasons and things like that. So, it includes those people that we've already discussed, but still good news to see and put a ratio on it so that we can see what's going on there. So overall, I think that the takeaway from this September report is, yes, it is stale. There's more good than bad in this, and if we get another, like, as an example, if you got 5 more reports so that you have a 6-month period that looks just like this, you probably look at this and say, yeah, we'll take that. It's not the best, jobs numbers that we've ever seen, but it puts to bed the idea that you're seeing anything bad going on in the labor market if you were to get more reports like this.
So help contextualize this, because when I sat down with a few clients recently, they were pointing to the Challenger Gray and Christmas data of the most announced layoffs that we've ever seen. I keep hearing from people that they expect the labor market to worsen. Again, this data is stale. It is 60 days old now. How should we contextualize this when you continue to hear these, weakening data points about the labor market, whether it's, weak seasonal hiring or layoff announcements that we haven't seen in a decade or more? I guess, how should we take this in the context of that additional data?
Couple things. First, again, this is stale, so, that you've said that already. Second piece, the Challenger Gray and Christmas numbers. They're the employment firm that reports the number of announced layoffs in any month. Remember, they don't like cover small companies, and small businesses employ most of the people in the United States. And so I think that overall, like, those announced layoffs, it's not really worth your time to pay attention to the Challenger Gray and Christmas numbers. Quite honestly, like, there is no serious person in the investment world that uses that as a reliable signal.
Agreed.
Because it's not. It doesn't mean anything about where things are going to go. It's not predictive of anything, and so it's not a useful signal in any way, shape, or form. When we look at, the concern that people have, it still is, this is reflected in the economic data as well, in that it's a really low hiring environment right now. And so even though we are not seeing a broad-based increase in, the number of in unemployment, and look, you could even make a case that we are seeing, something in unemployment, and I'll discuss that. Even though you're not seeing like a ratcheting up in unemployment, and on a non-linear fashion, you're not seeing it moving up exponentially. It still is really hard to get a job right now because the JOLTS data and the Indeed data tells us that hiring is really slow. So I think that this data is consistent with an economy that is slow to hire, but generally has been fairly slow to lay off. And remember, this report also predates some of a large number of the layoff announcements that we have seen.
Right.
And so it may not incorporate whether or not there has been an uptick in the layoff rate or the discharge rate.
I think my main conclusion, if I'm looking for one solid piece of information here, this is a significant reversal from the last 4 months of job creation. The last 4 months of job creation, May through August, averaged somewhere around 20,000 jobs.
Yep, so this is
We got over 100,000.
Yes.
5x that number. This is a big reversal from that 4-month trend over the summer. If you stick with it, then we do not really have concerns over the labor market. As we always say, don't take one data point to mean all that much, and also recognize we're not getting another data release on this stuff for quite some time, and the one we do get will be incomplete.
So let's take a quick break. When we return, let's talk a little bit about what that data release schedule looks like and what this means for the Fed right after this.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Mark Vonner is the CEO of Veterans Development Corporation. His dedication to serving our veterans has made an incredible impact on his family and employees. And he is so proud to be the presenting sponsor of the DAV 5K Boston.
This is Brittany Vonner. I'm a registered nurse who is now working as an assistant project manager at Veterans Development Corporation. Working with my father, Mark, has been an incredibly rewarding experience. Our company is dedicated to serving VA hospitals and veteran communities. We don't just build facilities, we build environments that support healing, resilience, and family. We are so proud to see our work directly impact the lives of veterans and the professionals who care for them. This rich history is why we care so much about supporting great organizations such as the Disabled American Veterans Department of Massachusetts in the work they do to care for our veterans.
Join Veterans Development Corporation in thanking our great American heroes. Please visit dav5k.boston to show your support today.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your home is more than just a place to live, it's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001 or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Planning for the future is challenging. At Cushing & Dolan, we believe that sometimes the simplest step can make all the difference. A joint revocable trust allows married couples to stay in control of their assets while making sure those assets are distributed properly. Our new guide, The Simplicity of Joint Revocable Trusts, shows how couples can take advantage of both the $13.99 million federal exemption and the $2 million Massachusetts exemption without losing benefits when one spouse passes away. This trust may help you avoid probate, reduce estate taxes, and even provide a step-up in basis that can save your family money when it's time to sell your home or investments. Learn how to make your estate plan work smarter, not harder. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699. Or you can request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's race was a tremendous success, and if you act fast, you can sign up for next year's race during our early access registration period through November 30th. Discounts are available, but you have to register by November 30th. Visit dav5k.boston and secure your spot today. That's dav5k.boston.
So, yesterday, the Bureau of Labor Statistics published their updated release dates for a whole bunch of data. Obviously, today was the September employment situation report that was originally going to be published on October 3rd, so that was published today. The Producer Price Index that was scheduled for Thursday, October 16th, that's going to come out next Tuesday. Okay. So, hey, here's like a little prize before Thanksgiving, the Producer Price Index, which no one knows what to do with anyways, generally.
True.
We're going to have that, the day before, everyone's traveling for Thanksgiving. And everyone's going to try to read into like what this would have meant for September PCE, which the Census Bureau produces. I think it's the Census Bureau. And so like we're just not going to like know what to do with ourselves on this. The September JOLTS report, canceled, not happening. October JOLTS report is going to come out on Tuesday, December 9th instead of Tuesday, December 2nd. So a 1-week pushback there. The October employment report, so the October jobs report, was supposed to be 2 Fridays ago, canceled, but some of the data, the establishment data, is going to be included in the November report that'll be published on Tuesday, December 16th.
Which is, what, 2 weeks late?
A week and a half late.
Yeah. Okay.
Now, why this matters is that the Fed meeting is going to be on December 9th and 10th.
Yeah.
And so before we go any further, I do need to make one thing very, very clear, because the idiots have been idioting over the last 24 hours about this. And specifically, I've seen all kinds of people being like, oh, like the BLS is going to, like they deliberately schedule this after the Fed meeting, which is kind of like, okay, so like that would not make any sense for a whole number of reasons, namely because, A, that report could end up being really good, and so why would the government cover up good news about the labor market? Other things, we've been getting, other alternative data that, is now kind of being confirmed by what the BLS has shown, so it's not going to show us anything else there. But again, the BLS is trying to play catch-up now with a huge lift in terms of trying to get this November data, which they were supposed to be collecting for the last couple of weeks. They're trying to get that done as quickly as possible. There's nothing nefarious about this in any way, shape, or form. So it boggles my mind when people immediately are like, oh, they deliberately scheduled this after the Fed meeting in order for, to let the Fed do, what they're going to do. Well, the only way that to let the Fed cut. It's like, okay, so that means that you think the economic data is stronger than, what otherwise would have been in the can by then. Like, it just doesn't make any logical sense. So let's get rid of the idea that the BLS is going to be manipulating this release date to benefit the Fed, because I saw a bunch of that crap yesterday, and I just have to call it out for what it is.
Yeah, it's silly.
The other piece, though, that is interesting to me.
Yep.
And I don't know if this has ever been done before. Would the Fed ever consider pushing their meeting back by a week so they can have this data in hand when they make their decision?
I don't see why you would. I get why you would, but frankly, in times where data has come out that's changed your opinion, what do? They just call an emergency meeting and change their mind. Right? So I don't see the purpose of doing so.
But it would be so here's the upside in doing so. The not betting market, it's like the Fed funds futures market right now is saying it's more likely than not that the Fed is not going to do anything.
Yes.
It would be a really bad look for the Fed if they did nothing after cutting twice and then had to call an emergency meeting a week later to cut. It's kind of like, okay, so you guys didn't know this a week ago? And so that's why I raised the question, and I don't think they will.
I guess my question...
Would you push the meeting back by a week? Because if the Fed doesn't cut in December, to me it's a really tough putt for them to say they're going to cut in January then, because then it's an acknowledgement that they made a mistake in December.
Yeah, I guess my question would be... They don't like to
ping-pong back and forth.
Has anything other than something like 9/11 ever caused the Fed to delay a meeting? Because that's the only event in modern history I can think of that would have potentially, and I don't even know if they did, but potentially have caused them to delay a meeting. So I can't imagine doing so over a delayed data release. But stranger things have happened, I suppose.
The other piece on this is... I got to say, after getting this report with the unemployment rate rising, remember, the Fed looks at the unemployment rate. They don't look at jobs created because they can't control the size of the labor force. Unemployment rate has now gone from 3.4 to 4.4% in a span of about 2.5 years. It's gone from 4.1 a year ago to 4.4, almost 4.5 now. That's a pretty strong case, in my opinion, for the Fed to cut in December.
Markets aren't buying it.
I know they're not. But I'll
take the opposite side of that inflation at 3% and markets surging again tells me no cut.
Quick break here. Wall Street Watch is next. Then we're talking Nvidia.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001 or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about joint revocable trusts. Todd, a lot of people think estate planning is complicated or something they can put off. Can you explain how a joint revocable trust can actually make things simpler for couples who just want to protect what they've built and keep things easy for their family?
Sure. Joint trusts are really so underutilized, but they're really the most important and easiest way to do planning. Many people think of two trusts, right? Splitting everything between a husband trust and a wife trust. Well, this already makes it simpler. If you have just one trust, you can both put your assets in the trust, whether you contribute the joint bank account or the joint brokerage account or the joint real estate and rental properties. It's easy. Just put it all into one trust and you're both trustees. So funding is simpler, operation is simpler, and most importantly, you can actually get a better result for moderate estates from an estate planning standpoint. Because on the first death, you get to cram down all the assets that are in the joint trust to get a step up in basis, whereas if you've separated the assets between the two trusts, you're only going to be able to cram down half as much. And if you do the planning right, you can actually use these trusts to get a double step up in basis when the surviving spouse dies.
Learn how you can avoid probate, eliminate estate taxes, protect your kids' inheritance, and keep your money in your family. Request this brand new guide from Cushing & Dolan. It's called The Simplicity of Joint Revocable Trusts. Call 866-848-5699. That's 866-848-5699. Or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, it may be late November, but the September jobs report is finally here, and it came in stronger than expected. 119,000 jobs were added in September, higher than forecasts of 51,000. Wall Street's also reacting to solid third quarter results and revenue forecasts from AI giant Nvidia, in addition to earnings from consumer spending bellwether Walmart. Right now, the Dow is up 1.4% or 639 points. S&P 500 up 1.8% or 120 points. Tech-heavy NASDAQ surging nearly 2.5% or 542 points. Russell 2000 also up over 2% higher. 10-year Treasury yield is down 1 basis point at 4.117%, and crude oil up over 1% higher, trading just above $60 a barrel. Nvidia's jumping 4% after the AI chip maker saw its revenue surge 62% year-on-year and issued stronger than expected fourth quarter sales guidance. Other chip makers also seeing gains in reaction to Nvidia's earnings. Chuck and Mike will have more on Nvidia's earnings coming up here in a matter of moments. AMD shares are climbing 2% after the Commerce Department approved a deal that will allow U.S. companies to sell advanced chips to the Middle East. Meanwhile, the country's biggest retailer, Walmart, posted solid quarterly results and raised its outlook. Walmart also reported a 4.5% increase in comparable sales in the U.S. during the quarter, driven by consumers seeking value. Walmart rallying 6%. Elsewhere, Verizon announced it will cut more than 13,000 jobs in its largest single layoff as it works to reduce costs and restructure operations. Shares are up nearly 1%. Palo Alto Networks announced it will acquire cloud management company Chronosphere for $3.3 billion. The cybersecurity company also saw better than expected quarterly results. However, that stock is down by about 2%. And shares in Bath & Body Works sinking 22% after the self-care and home products retailer posted third quarter results that underwhelmed, where it posted a drop in quarterly net sales and income. The company also slashed its annual forecast. I'm Tucker Silva, and that is Wall Street Watch.
Mike, before we touch on Nvidia earnings, or we'll do more than that, we'll cover them pretty in-depth because, biggest company in the world reports earnings. You got to do a little bit on them. We did also get weekly jobless claims data. The Department of Labor has backfilled all the data for the 6 weeks that were missed. Quite honestly, I'm not even going to go through every week. There was nothing particularly outstanding in them. The most recent week now, which is through November 12th, I think it is. Let me see. Hold on. November 15th. The initial claims came in at 220,000, a modest decrease of 8,000 from the week before. So still nothing happening on initial claims at the moment. Continuing claims moving up a little bit to 1.974 million. So continuing claims are, continuing to show about a 4 to 5% gain over last year, which is not great but not hugely problematic. If you start seeing that number moving to a 10% year-over-year growth rate, that's usually where it starts to, move upward quickly after that. But we're just not seeing that. So the jobless claims data continuing to tell us that despite the concerns that are out there, there's no meaningful shift that's happening in the labor market. It's just a continued slowing, which, look, continued slowing forever is not good, but there's no intensifying deterioration that's going on. It's just a continued slowing.
Yeah. And again, to your point earlier about what does the Fed do here, I'll acknowledge that I think the Fed is more likely to cut than the odds are saying right now. But, if I'm in charge, I've got jobless claims numbers that are not of concern. I've got a jobs creation number that came in better than expected, a slightly concerning unemployment number, markets at all-time highs, all-time
Fed doesn't look at the jobs creation number, though.
They look at the unemployment rate. I get it. But taken all in the aggregate, I, too, would pause the rate cutting that we're doing, acknowledging for a minute here, Chuck, that they will look foolish if they have to go do so, if they have to go cut rates again in January. But yeah, were I in charge, I don't think I'd be cutting rates at this next meeting. And I think once again at this meeting, we will get people on both sides wanting to do something different than what the Fed decides, right? The last meeting we had dissents towards lower rates and dissents towards no rate cuts, which is pretty rare.
Let's talk a little bit about Nvidia earnings, which, Mark Venditti and I were talking about this in the run-up to it, and we came to a couple conclusions, Mike. The first is neither of us expected to see any weakness in Nvidia earnings yesterday because
everybody else that buys their chips has already reported.
And also the concern that people have out there is not that people are stopping buying Nvidia chips right now. It's that companies are buying way too many of them and they won't be able to figure out how to be profitable after buying all of them.
Sure.
Right? You don't have a bubble when companies say, no, we've got enough.
Right.
You have the bubble when companies say, oh, we can't figure out how to monetize this, and now we're going to start canceling future orders. So, I personally didn't have any thought that you were going to see any, signs of weakness in this because the stuff that's been concerning markets has been Oracle borrowing a bunch of money to go buy Nvidia chips. Meta borrowing a bunch of money to go buy Nvidia chips. Well, if that's the case, why would you be concerned about Nvidia's earnings for this quarter?
Right. The other thing that has been concerning to investors has been the roundabout deals, right? Here's a bunch of money that we are going to invest in you, and that investment is going to be contingent upon you turning around and buying our chips. For a while there, you were able to point to these deals and say, oh, that's not the case. It's not exclusive. The recent deals have been exactly that. Hey, here's a bunch of money from Nvidia, and they're only going to invest it if you turn around and go buy the chips that you can't otherwise afford. So that's been another concern, but again, none of that would hit at Nvidia's sales numbers, and they didn't. They reported $57 billion worth of revenue, beating expectations once again.
And let's talk a little bit just about what we're seeing here in terms of the numbers. So yeah, north of $57 billion in revenue. They're projecting, somewhere in the mid $60 billion in revenue for the next quarter. And I just want to point out that Nvidia first crossed $60 billion in annual revenue in Q4 of 23.
Now they're doing it quarterly.
and now they're doing it quarterly. So, like, again, there's some pretty impressive stuff that's here. The questions, as I've laid them out, are going to be, hey, show me what happens to companies' appetite for spending 12 to 24 months from now, once they have to finally start having this depreciation from all this CapEx hitting their financial statements. And then we'll get a sense of whether they want to continue. Those are questions that are going to linger. Like, Nvidia can't answer those questions with this report. All they can tell us is what we know, which is that companies continue to buy these chips like crazy. And until we hear from companies that they're going to pivot, I think the expectation should be that companies continue to do exactly this. Am I wrong?
No, I think that is the case until that narrative breaks. And we saw signs that it might be starting to over the course of the last few weeks. But if it does, you won't see it show up in NVIDIA's earnings until quarters later.
And ultimately, it's going to depend, like, the long-term success of NVIDIA stock. Because that's what we're talking about here. We're not talking about the company. Like, the company, quite honestly, like, I think they're going to be, like, okay. Like, they're pretty smart people. We're talking about the stock here. It's going to depend on, will their customers continue to place orders year after year in increasing numbers for these chips? And that's going to be determined by whether companies and individuals start to pay up for AI in the numbers needed over the next couple of years. Because all the free riders that are, using the free version of ChatGPT and Gemini, man, like, you're not contributing anything to the continued success of those platforms.
No, to use the example that I used the other day as well. My wife creating a picture of our dog and cat who despise each other snuggling using ChatGPT is a real big money loser for ChatGPT. And that's a lot of the processing. I really wonder how much it cost OpenAI to create the image that it did for my wife the other day, which is completely useless. Because that's what is happening right now. And the question is, are businesses like ours and others out there going to find a way to monetize this stuff? And will businesses like ours be willing to pay for this stuff that right now is useful in some key areas, but not fully monetizable yet?
And stuff that's even, like, useful, but still requires, like, some work. Like, as an example, I was working on something yesterday just trying to organize a bunch of zip codes. And it ended up being, like, 4,500 zip codes. And I'm looking at this thing, I'm playing around with it in Excel, trying to, like, do text to columns and this and that, and I'm like, okay, this isn't working. Let me see, like, what artificial intelligence can do with these zip codes. And I said, look, I need you to group this into these buckets, like, based on geographic regions, and then I need you to, like, spit out a CSV that does this so that I can, like, see what I'm looking at. And a couple things, like, when I actually pulled the list of zip codes, it did a pretty darn good job of organizing them. There ended up being 3,400 that it categorized, but in the bucket report that it generated for me, like how many are in each bucket, it had 4,400. So I literally asked them, like, what's with the 1,000 record discrepancy? And it's like, well, some of these might have been cleaned up in this and that. I'm like, okay, well, why'd you give me, the raw number?
And it said, don't worry about it.
It said, hey, Chuck.
Pound sand, buddy.
Never you mind.
Yeah, I know where you're typing this from, Chuck.
Don't ask questions you don't want answers to.
So, like, in any case, I'm like, okay, this is, fine. But then I start going through, and I find 2 zip codes that are assigned to one region, and when I actually plug them into USPS, those zip codes don't even exist. And so I'm kind of going, okay, so yes, it might be like 95% accurate, but is that 5% a problem enough to where I can't use it for what I want to? And I'm just not sure yet. And this, by the way, was with the newest Gemini 3 version that Google's been all ballyhoo and, hubbub about the last day or two.
Ballyhoo.
And don't get me wrong. So I tried this in ChatGPT, and the result was horrendous. I asked it to, like, give me mappings of these regions, and it put, like, 4 of them in the ocean.
Yeah.
Like, it just was not working. So there's still some work that needs to be done to convince me, yes, I should be paying for this, because if I paid an intern who generated, hey, the Boston region is in the middle of the Atlantic,
you're fired.
That intern doesn't have a future at my company. If I had someone who was just making up zip codes, that's probably not a great employee. Like, you have to be able to trust them. So can I pay artificial intelligence to make those mistakes if I wouldn't pay an employee to make those mistakes? I don't know. Let's take a quick break. When we return, Walmart earnings after this.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
Estate planning doesn't have to be complicated. Cushing & Dolan's new guide, The Simplicity of Joint Revocable Trusts, shows couples how to stay in control, avoid probate, and help protect what they've built for their family. Call 866-848-5699 right now and ask for your free copy today. That's 866-848-5699. Or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Your home has been the center of your life for years, maybe decades, but as you enter retirement, its role starts to change. Hi, this is Mike Armstrong from the Armstrong Advisory Group. The focus shifts from what your home means to how well it supports your lifestyle. For many people, the space that once made sense for a busy family now requires more time, energy, and money than it should. Retirement is about simplifying, choosing a home that's easier to maintain, closer to the people and services that matter, and better aligned with how you want to live may be the right move as you head into your later years. Our new guide called Owning Real Estate and Retirement tackles a number of different issues that may help you turn your home into a source of flexibility and freedom, helping you plan for the years ahead with comfort and confidence. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Maggins Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Your next incredible vacation is a click away, and if you act fast, you could be on St. Croix to experience their Crucian Christmas Festival taking place this December through early January. Discover the magic of this long-standing tradition with incredible food, music, and entertainment, or just go to soak up the sun, stroll along white sand beaches, and feel the rhythm of the heartbeat of the islands. The USVI is America's Caribbean paradise. Plan your escape now at visitusvi.com. That's visitusvi.com.
Mike, Walmart reported earnings. What do we see from them?
Adjusted EPS coming in at 62 cents a share, beating estimates. Revenue beat estimates. E-commerce sales grew by double digits once again. Stock is up big. I think, honestly, the only thing that you can criticize about Walmart right now is kind of similar thing that you can criticize Nvidia about, which is your stock is priced for perfection. Can you keep getting perfection? Because, I mean, did you see anything out there from analysts that was an area of concern? The only thing I saw somebody write about was how Sam's Club was a slight drag on their business, whereas everything else was near perfection. But to be clear, the PE ratio on Walmart now, you're talking about a price to earnings of 40. Like, that's pretty high. I mean, again, I'm not an analyst that covers consumer staples by any stretch, but it's being priced for perfection, it seems as though.
I guess I look at a company like Walmart, and the question that I ask is, look, if you are a buyer of Walmart at this price, what would ever make you a seller?
Yeah.
Because, like, here's the thing. In our lifetimes, Michael, what are the odds of Walmart going out of business? They're more entrenched than a company like Sears ever was.
Yeah, close to zero.
You know, it's like it's
although,
hard.
Yeah, I mean, we say that, but right, if you had asked this question about Sears back in 1985, what would the answer have been?
It still took 30 years for that to happen.
It did, yeah.
You know, like, and look, Sears' golden age was still like, 50s, 60s, right? So it was like, okay, if it takes 50 years to happen,
right?
Yeah, there's a decent chance I might be dead by then.
Right. Yeah. So, Walmart stock continues to just defy all expectations. They're attracting new customers. They are the go-to place still for where you find discounts, and it's showing in their earnings price. Folks, we are approaching the Thanksgiving holiday here. I want to talk to you briefly about the guide from Armstrong Advisory Group for the month of November. It's all about owning real estate in retirement and the decision-making process about where to own, whether to own versus to rent, where to make your residency, and the factors to consider as you age in your home. We have this conversation with clients all the time, all about that conversation around downsizing and how much to expect in maintenance costs for your home. If you are facing down that retirement scenario and trying to sort this through, maybe it's a second home in a different state, maybe it's a downsize decision, request our free guide now. The number is 800-393-4001 for our brand new guide for the month of November, Owning Real Estate in Retirement. You can go to armstrongadvisory.com to request your copy, but that number once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, do we want to talk groceries or mass retailers trying to predict what's going to happen for holiday shopping?
I want to talk grocery stores, yeah.
Yeah, so we've got the Nonprofit Consumers Checkbook went through a bunch of New England supermarkets and evaluated them based on quality and pricing. And I don't think that the results are particularly surprising. On the pricing side of things, Aldi, Market Basket, and Price Right came in as best of the bunch for New England, while Roach Brothers, Donnellan's, and Whole Foods came in at the highest cost. What was interesting to me, there's about a 30% difference between those from a pricing perspective.
Massive difference.
In when you're looking at it from most expensive to least. And if you're comparing the other way, like how much does it cost to go from, a a Market Basket to a Whole Foods, it's almost a 50% jump.
Yeah.
So, like, big pricing range. Quality, best for quality.
Even bigger ranges.
Yeah, well, how does one measure, quality, I guess, is an interesting question. But in any case, Roach Brothers and Trader Joe's coming in best of the bunch
Wegmans.
there. And Wegmans. Quick break here, hour 2 in just a bit.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. Estate planning doesn't have to be complicated. Cushing & Dolan's new guide, The Simplicity of Joint Revocable Trusts, shows couples how to stay in control, avoid probate, and help protect what they've built for their family. Call 866-848-5699 right now and ask for your free copy today. That's 866-848-5699. Or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Mark Vonner is the CEO of Veterans Development Corporation. His dedication to serving our veterans has made an incredible impact on his family and employees. And he is so proud to be the presenting sponsor of the DAV 5K Boston.
This is Brittany Bonner. I'm a registered nurse who is now working as an assistant project manager at Veterans Development Corporation. Working with my father, Mark, has been an incredibly rewarding experience. Our company is dedicated to serving VA hospitals and veteran communities. We don't just build facilities, we build environments that support healing, resilience, and family. We are so proud to see our work directly impact the lives of veterans and the professionals who care for them. This rich history is why we care so much about supporting great organizations such as the Disabled American Veterans Department of Massachusetts in the work they do to care for our veterans.
Join Veterans Development Corporation in thanking our great American heroes. Please visit dav5k.boston to show your support today.
The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Maggins Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Owning Real Estate in Retirement. Mike, for someone who wants to own multiple properties in retirement, maybe a warm weather and a summer property, what do you end up doing as far as, trying to negotiate and navigate that decision?
Well, it's a lot of questions to answer. How much time are we going to spend in one place versus another? Where am I going to be a resident? If I am, leaving between two different homes, where do I feel comfortable being a resident? I get this question all the time. How much will I get in tax savings, for instance, by moving to a no income tax state? And what ends up happening, though, sometimes is they make that decision based on income tax and don't realize where a lot of the cost savings comes, which is estate taxes. And so if I'm going to own multiple properties, where do I intend on actually making my residency? And will I be able to commit to that for the long term is an important one.
Another piece there, look, at a certain point in everyone's life, that travel and moving between two places and even maintaining two places becomes challenging. When do you typically see those kinds of conversations being navigated?
For most folks, I see it in the 70s and early 80s. That's when this stuff starts to change for a lot of people, but ultimately it's customized to each individual, and you might be able to afford one scenario if you're willing to rent out your property for a period of time. Sure. It really comes down to customizing for your situation.
Our guide this month is titled Owning Real Estate in Retirement, and you can request it by calling 800-393-4001 or going to armstrongadvisory.com. That guide again is titled Owning Real Estate in Retirement, and you can request it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck Mike Tucker with you here on a Thursday, and busy one. At 8:30 this morning, we received the jobs report for the month of September, delayed about a month and a half due to the government shutdown. But what we saw was a pretty good report, quite honestly. 119,000 jobs created, but the unemployment rate did rise to 4.4%. A lot of the supplemental under-the-hood things did show some stability, so I think this is a nice bounce-back report after several months of weakness. Whether this becomes the start of a new trend or just an outlier, we don't know yet. We're going to have to watch the next couple months to see. But it was, I would probably grade this, Mike, what do you say, like B plus, somewhere in that range?
I don't know that I go B plus on it, given the unemployment rate change.
B. Let's call it a B.
Yeah.
You could even call it a B minus.
I might be willing to go there.
Some of these other ones we've talked about have been, in the C to D range recently, and so this is it's an improvement nonetheless. Also, we received Nvidia earnings after the bell yesterday. They were quite good, and the market is rewarding them, though not as much as in the after-hours period. They're up about 2.5% now after being up about 5% after hours yesterday. But Nvidia continuing to say, hey, you want chips? We got chips. I believe the great philosopher Jensen Huang said that several days ago. Yes. Other things that we saw. Walmart continuing to sell other kinds of chips to anyone who wants them. Walmart with a fantastic quarter. The stock up about 6% as a result. In particular, indicating they're seeing more penetration in high-income areas, which does raise the question of, okay, is that high-income people trading down, and how does that affect the overall economy? The answer so far has been, well, it hasn't really. But ultimately, another good quarter for Walmart. Grocery store sales continuing to remain strong, unlike Target, which saw some weakness there, and Walmart seeing much better on the discretionary purchase side of things than what Target reported. And so you continue to see a big divergence between where those two companies are going as well. As far as the overall markets, Dow's up 534 points right now, S&P's up 88. Both, good numbers. The NASDAQ, by the way, up about 370 points, all good. But all these also down about 0.2% from their morning high. So could just look, I have no idea where markets are going to go like 5 hours from now, but this could be a little bit of a wobble, or it could just, be something where, it's stocks starting to give up gains after the initial burst of optimism. I have absolutely no clue.
In either case, it's a reversal of what we saw towards the end of last week and the first few days of this week in terms of market action, which had been, largely negative, not dramatically, not 5% in a day down, but, strong push downward on overall indices over the course of the last week or so, and this is reversing it so far this morning.
You want to know what is kind of interesting to me looking at equity markets, Mike? So you get a good day like this, right? Or at least a good, couple hours like this. And typically, this serves to kind of bop the VIX on its head pretty good. And it has to a certain extent. We were up over, 23, closing in on 24 yesterday. But you're sitting here today, the S&P's up, 1.25%. And the VIX is still hanging out near 21.
Yeah.
That doesn't feel great.
And it has been for the last few weeks, right?
It continues to have that vibe of like somebody knows something out there and doesn't want to move on. And I can't reconcile like what's happening here, because a VIX over 20, like in this environment, for the last 5-6 years, generally tells you like something's getting dodgy. And usually it's, hey, once you get to 25, you either like have something break and you go higher into the 30s, or things resolve and you get back down into the teens pretty quickly. The fact that we're still sitting here, we've cleared Nvidia earnings, we've cleared that September jobs report, we've cleared the backlog on jobless claims. On top of which, by the way, next week is Thanksgiving, which means you have a day and a half where there's no trading, which normally depresses the VIX anyways, since those days will fall in the 30 calendar day window. And the fact that you're still sitting here right now with VIX at 21 kind of has me like, just I'm feeling something in my belly that I don't know what to do with. And it doesn't feel great is what I'm saying. Let's talk about the housing market. If you are a buyer for homes, specifically, take a map of the United States and make an L like my 2-year-old likes to, where it's kind of a short little, vertical thing and then a big, long horizontal one. And that's the part of the country where there's great buyer's markets right now. You go from Washington through California, down through Arizona, and then across the southeast and southwest. That is where it is a huge buyer's market at the moment in general.
And so according to, Redfin, this is the strongest buyer's market, meaning portion of home sellers versus buyers, since 2013. I don't know that that's the best way to look at it, but
How do they measure that?
I mean, like traffic volume, website volume, I don't know. I'm not sure how useful of a data point that truly is. But it's
like when stocks go down and people are like, well, it's more sellers than buyers. And I remind them, no, it's just the sellers and buyers matched up at a lower price point. You can't have more sellers than buyers.
So in either case, I think we can both admit, right? Like the housing market has weakened significantly. But it hasn't become a lot more affordable. And so I was interested in these data points, right? So like housing market today versus 2013. So I ran some numbers. Median home price for most recent data we have in the U.S., Q2 of 2025, came in at just shy of $411,000. Same time period, 2013, we were talking about $268,000. No huge surprise there. We were still off of the Great Recession. Mortgage rates now 6.4%, back then 3.7%. I ran out the mortgage for these median homes in 2013 versus now. And your mortgage payment for now, over $2,000 per month, whereas back then just under $1,000 a month. Seems like a huge dramatic shift, but I also point out that, folks, household income today, or at least in 2024, was about $84,000. Back then was $54,000. So your percentage of your income going to your annual mortgage payment today is pushing 30%, which is a huge number. Back in 2013, it was 22%, though. I expected that margin to be bigger, given how much home prices have risen and given how much mortgage rates have risen. But we are, again, in this area here where I think the affordability piece is going to slowly get better over the course of the next couple of years.
Right. The path, in my opinion, and this is one that's shared by Connor Sen from Bloomberg, is I don't think you necessarily see a housing crash that resolves this, but it's much more just that, okay, if you have a couple of years, like 3-4 years, where incomes can outpace home price growth by 2 to 3%, it gets you where you need to be. Does that happen, or do we see a problem in the housing market first? Again, when I say problem in the housing market, there's nothing out there in housing that looks like 2008.
No.
There's nothing there. I mean, people have been trying. Everyone's been publishing the headlines for like the last couple of years, like, oh, foreclosures are rising, and this. It's like, yeah, they're rising off historic lows. They're still like well below 2019 levels. There's nothing in housing to me that looks like it's going to cause any kind of broad-based financial stress in the system. The only place you could maybe point to in housing that could be a problem is construction layoffs if new construction for housing remains this light. But that's not something that causes systemic issues for the whole, for everyone in the country.
Right.
So housing, like, again, I look at it and I go, I don't think it's really going to help the economy much in the next couple of years. But I don't really see a path where it hurts the economy a ton either.
Yeah, and for those that are hunting for a deal, there are areas finally where you can find one.
Yeah.
Just nowhere near around here.
Yes, around here being New England, where, like, if you want the worst places to buy a house from an affordability perspective right now, Connecticut is kind of like right at the forefront. The rest of New England, most of New York and Pennsylvania, through Illinois, even into like Minnesota, like that whole belt there, not great. You get out of that region and things start to look better in lots of the country, but the Northeast and Upper Midwest, pretty dodgy still if you are a buyer to find anything affordable. Let's take a quick break. When we come back, we've got trivia, and then we'll talk about the shrinking American middle class.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Magens Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001 or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Planning for the future is challenging. At Cushing & Dolan, we believe that sometimes the simplest step can make all the difference. A joint revocable trust allows married couples to stay in control of their assets while making sure those assets are distributed properly. Our new guide, The Simplicity of Joint Revocable Trusts, shows how couples can take advantage of both the $13.99 million federal exemption and the $2 million Massachusetts exemption without losing benefits when one spouse passes away. This trust may help you avoid probate, reduce estate taxes, and even provide a step-up in basis that can save your family money when it's time to sell your home or investments. Learn how to make your estate plan work smarter, not harder. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699. Or you can request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Hey, if you missed any of our shows this week, you can find them on our YouTube page. We stream the show live every day, but also archive every hour. And all of our most noteworthy interviews. Go to YouTube, search for the Financial Exchange in that search bar, and hit that subscribe button. Again, Financial Exchange Show on YouTube. hit the subscribe button. Time for trivia here on the Financial Exchange, and on this day in 1985, Microsoft released Windows 1.0. Windows is the most popular desktop operating system in the world, with a 72% market share as of October 2025, and the second most popular operating system overall behind Android. So, trivia question today: what version of Windows was released by Microsoft earlier this year? Once again, what version of Windows was released by Microsoft earlier this year? Be the third person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the third correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Mike Peace in Bloomberg Opinion. The American middle class is shrinking, and that's okay. Gosh, that's not a sentiment that we hear often, but why is this piece saying it's fine?
So, again, you write the article, not the headline, so I'm wondering if she did both here. But here's a brief summary of things in numbers. In 1967, slightly more than 5% of Americans earned or received more than $150,000 in today's dollars. Currently,
adjusted for inflation.
Adjusted for inflation. Yep.
Yes.
Now more than 30% of people do. So her point first is, hey, a larger portion of Americans make a large sum of money. In 1967, more than 38% earned or received less than $50,000. Today, that's 21%. So across the spectrum, she's saying, hey, the middle class is shrinking in a few different ways, but not from the perspective of everyone's getting worse off. The bad part of it that she points out is that the wealth inequality today, compared to where it was in the 60s, is almost unrecognizable. The very rich, the top 5%, really bring in way more of the income than they did in 1967 and represent a much bigger share. So yes, more people are falling on the ends of those curves towards the upside, but the very top of the crop, the top 1%, are bringing in a lot more of the total share of income than they were back in the 60s. And so, I mean, again, the subject of the article says it's not a big deal. I would point to this one effect as one of the main causes of, what we're seeing in terms of populism and global shifts in how people view the fairness of the economy, how people view capitalism, all sorts of changes that we've been seeing over the last 60 years, I think are primarily attributable to this effect.
What do we do about this? Let's start number one. Is there something that should be done about this?
About the wealth effect? About the wealth inequality effect?
Well, what is the actual problem that you're saying exists is that top 5% is just so skewed in terms of what they earn, and it allows them to accumulate vast amounts of wealth, which then magnifies that through compounding. Is that a fair assessment of the problem?
Yeah, and again, I think plenty of people would debate me as to whether or not that is a problem. But that is a truth today, that the magnitude of wealth accumulated at the top 5% is far higher than we've seen in at least the last 75 years. I don't, go back to the 1920s, I'm not sure what it looked like.
I have a very simple and elegant framework that I think could deal with this if we think it's a problem.
Okay.
It's two parts. And I guarantee that, everyone listening is going to hate one of the two parts, which is good. That's how you know it's a good idea, is when no one likes it. Number one, get rid of the federal estate tax completely. Number two, get rid of the step-up in cost basis that occurs when someone dies that basically removes capital gains that have accrued over the course of their lifetime. If you think about it, there's no reason why your heirs, if they decide to sell something that you bought, should not pay any... why do you just get out of paying capital gains tax because you die?
Yeah.
Let's say that I, as an example... I bought, I was one of the first people that, invested in Microsoft back before I was born. And, the $100 that I took there is now, $1 million. and I say I can't sell this because I'm going to have to pay like $200,000 in capital gains taxes. So how come if I die and my daughters inherit it, why do they not have to pay any capital gains taxes just because I died?
They're grieving, Chuck.
Okay, they don't have to sell it right away. Like, no one's making them sell it.
Yeah, again, I think...
Along with that, the other piece, here's the third piece that completes the puzzle. Every single individual should have a $1 million lifetime capital gains exemption.
Yeah, you brought that up before.
Because we want more people to be millionaires. I want more millionaires. I want every person in the country to have a chance to say, hey, I made it, I made $1 million in selling this business or buying this stock or doing this, and I get to keep that. But once you've done that, then capital gains should be taxed the same way that ordinary income is. Because it's something where you want to give everyone a chance to make that million so they have, that capital that they can then use for life. But after that, let's treat everyone the same.
I would say a huge contributor to this effect has been our policies over the last 50 years when it comes to monopolies. We have been, for whatever reason, just worse at breaking up big companies than we were in previous decades. And I think that is a huge contributing factor to this effect.
Yeah, I think that's fair.
The Amazons, the Googles, the Facebooks, and by the way, 2 of those 3 companies just won antitrust lawsuits about breaking them up. So I don't think this is about to shift anytime soon, but I think we are doing a disservice to the general public by letting these companies get so big and dominant that they control huge aspects of our lives.
Anytime that you want to talk about, more effective antitrust enforcement, I'm always all ears.
Yeah.
It's one of my great flaws is that when I hear someone talking about, hey, companies have gotten too big, I'll basically always agree with you. It's just kind of how I'm wired at this point.
But again, I think when you see surprising election results like you just did in New York City, or results that surprise some people anyway, I look at this as being a big contributing factor too, because people are doubting the system that has worked in the United States for a couple hundred years.
Quick break. When we come back, we get the trivia answer and Wall Street Watch.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001 or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Maggins Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your financial exchange quick tip of the day. And today we're talking about joint revocable trusts. Todd, for couples who already have wills in place, why might it make sense to look at a joint revocable trust, and what can it do that a simple will can't?
Yeah, this is important because a lot of people believe that wills are an estate plan, when really a will is a won't. I've said it many times. It won't avoid probate. It won't reduce estate taxes. It won't protect assets from the nursing home. You're going to need some kind of trust to do that. So that's the most important reason why a will is not enough. Then you need to think about, well, what kind of trust are you doing? Well, in this case, we're talking about joint trusts. And boy, folks, these are so underutilized, but they are really powerful for moderate estates. And today, moderate estates are, below 15 million with the exemption as high as it is. So you can actually make it easier for folks. Put all the assets into this trust. You can jointly put your brokerage accounts and real estate in the trust. It's simple. You don't have to split assets between two trusts. Ease of operation, and it's going to reduce estate taxes, avoid probate, and provide a bloodline plan for your family, even to the extent where if you want to protect it from future creditors and divorces of the kids, you can do that in the trust as well. And the will won't do any of that.
Cushing & Dolan have been helping families like yours for more than 40 years now. Learn how you can avoid probate, eliminate estate taxes, protect your kids' inheritance, and keep your money in your family. Request this brand new guide from Cushing & Dolan called The Simplicity of Joint Revocable Trusts. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, after a strong rally in early trading, markets now giving back some of their gains as traders react to strong earnings and revenue forecasts from Nvidia and Walmart. The delayed September jobs report also came in this morning above forecasts, where 119,000 jobs were added in September, higher than estimates of 51,000. Right now, the Dow is up 0.6%, or 274 points. S&P 500 also up about 0.6%, or 43 points higher. NASDAQ up 0.8%. It was up over 2% higher earlier. Now up 179 points. Russell 2000 is up over 1%. 10-year Treasury yield down 2 basis points at 4.102%. And crude oil up about 0.6%, trading just below $60 a barrel. Nvidia shares are up nearly 2% after the AI chip maker saw its revenue surge 62% year-on-year and issued stronger than expected fourth quarter sales guidance. Meanwhile, the country's biggest retailer in Walmart posted solid quarterly results and raised its outlook. Walmart also reported a 4.5% increase in comparable sales in the U.S. during the quarter, driven by consumers seeking value. Walmart is up over 6%. Elsewhere, Verizon announced it will cut more than 13,000 jobs in its largest single layoff as it works to reduce costs and restructure operations. Shares are up modestly, and shares in Bath & Body Works are sinking 23% after the self-care and home products retailer posted third quarter results that underwhelmed, where it posted a drop in quarterly net sales and income. The company also slashed its annual forecast. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the question, what version of Windows was released by Microsoft earlier this year? That would be Windows 11. Pete from Worcester is our winner today, taking home a Financial Exchange Show t-shirt, and we play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mike, you think they should rebrand Windows?
No, I don't. Just straight up.
It's fine.
It's been a few decades now. Pretty solid brand. Stick with it.
No matter what they call it, people are going to be stuck with it.
Windows Plus.
Doors.
Yeah.
Thank you. Mike, by the way, have you noticed that the S&P is now 90 points off its intraday high?
I have noticed that, yeah. NASDAQ was up over 2%. It's now up 0.2%.
Yeah, I don't know what to make of this, but...
Speaks that VIX you were seeing earlier.
I mean, Oracle's down 2% on the day now.
Yeah.
AMD's down 1.5%. Netflix, Nvidia, which Tucker just mentioned, just fell 0.5% in the last minute.
Yeah.
What's going on? I don't know. I can't make heads or tails out of it, but I can't get past this nagging feeling that for whatever reason, the Bitcoin tail is wagging the dog in tech markets right now, because every time it gets hammered, tech follows in pretty short order. And I don't know what to make of this. But it's kind of nasty out there. Let's talk about Blue Owl. Piece in Bloomberg. Blue Owl money machine sputters in face of private credit cracks. Michael, where do I get a money machine?
This has been pretty ugly for Blue Owl, just in terms of... I mean, again, for a company that nobody talked about until a year ago, the kind of PR that they've been getting over the last couple of weeks has been fascinating. So, again, if you are just tuning into this program, you may not have heard of Blue Owl. They are a major player in the private credit lending space. They make all sorts of loans to all sorts of businesses and then package those loans into investable products. Some are privately held, some are publicly traded. One of the privately held ones saw more redemptions than they were prepared to handle, and so they paused all redemptions on this fund.
And by the way, their business has exploded in a positive use of the term in the last several years. In March of 21, their trailing 12-month revenue was about $300 million. As of their most recent quarter that ended in September, they were at $2.75 billion, so 9x revenue growth in the last 4 years.
So what happened over the course of the last week or so was that they tried to take this private fund, merge it with a publicly traded fund that would have resulted in a haircut for investors in that fund, but give them access to liquidity. And markets kind of revolted on the stock itself and everything along with it. What I keep going back to, though, Chuck, is there's been a bunch of blow-ups in the private credit space. Has Blue Owl been named in any of them?
No.
Right? Like, I mean, it's not to say that they don't have problems of their own. They're a massive player here. But when I think about the blow-ups that we've been talking about, none of them have really concerned Blue Owl or their space in this overall market right now.
No, I mean, it's been a small number to this point.
True.
And again, the concern is that, like, my personal concern, and I'm not saying this will or won't happen, but in spring and summer of 2007, you started seeing, like, some sporadic issues with subprime in the housing market. And it wasn't like no one was like, oh, like, this is affecting everyone. It was just, oh, it must just be, like, this product or this one. And within a year, it was like, no, like, it's kind of everywhere. And then 6 months after that, it was, hey, bailouts.
Yep.
And so the concern that you have on this is kind of threefold. The first is no one knows how big the private credit industry actually is. It's private. That's the very nature of it. These are not loans that are traded, on publicly traded indices. No one knows how big this actually is. Number two, no one knows how widespread the problems that are starting to pop up are. We don't know if this is 0.001% of loans that have these issues, 0.1%, or 1%. And there's a big difference between those orders of magnitude. And the third piece then is the combination, which is, okay, depending on how big the overall private credit market is and what percentage of loans have problems, you get to a place where it could be very problematic for the overall U.S. economy, or it could mean nothing And no one knows right now.
Yeah, it's pretty opaque.
And quite honestly, this is because we've pushed so much of this lending into these areas and away from banks and public markets that we can't see it. This whole non-bank lending thing is going to come back to bite us, and this might be it. I don't know, but it might be. Like whenever you take stuff out of the public eye, you're taking risks that are the visibility into this stuff is a real problem when you're trying to navigate it, and it doesn't feel great.
The U.S. Virgin Islands isn't just a postcard, it's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted, as the festival village buzzes with live music, reggae, and soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Magens Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
Mike, we got a piece in Bloomberg. Buffett's alphabet blessing puts valuation paradox back in focus. And basically,
is it a paradox, or is it just the fact that Google stock is really expensive?
Google stock's really expensive, and Buffett's not running the show at Berkshire anymore, and so I think those two things can be just fine.
Yeah, I mean, look, for anybody that missed it, I know that Alphabet hasn't been the number one company mentioned when we're talking about the AI trade, but they have been the number one beneficiary of the AI trade. And you look at how they're positioned, they are starting to make their own chips. They have their own competing AI tool. And then they also have, correct me if I'm wrong, Chuck, the most profitable business in history?
Yeah, we got to talk a little bit about their naming of these products.
Did you see the image generator that they
I
named?
did. Nana Banana Pro?
Yeah.
I think it's Nano.
Nano Banana Pro, yeah.
Oh, the original thing that came across my ticker was Nana Banana Pro. I'm like...
Oh, like your grandma?
Right?
Yeah.
And then their developer toolkit is now Gemini Anti-Gravity. Like, I don't know what these things mean.
Yeah. I don't know why banana's in there.
Nano Banana
cool.
Pro.
Yeah.
I'd prefer Nano Banana Amateur, personally.
Mm.
I don't think I'm skilled enough to use the professional tools of graphic design. But, yeah, look, I think Google, the big thing that I will say about them is they do appear to be doing some innovative things on the AI side right now.
Sure.
Their core business, while unexciting, continues to deliver. And even though I've been pretty critical of Google for the last, 5 or 6 years, being like, hey, what are you guys doing that's interesting? I think the AI stuff is interesting enough now that, there might be... a lot of people after this release saying that OpenAI is kind of left behind, quite honestly, which is interesting to me. And these are people that I trust on this. And some people saying it's like, look, it might be like Gemini, Anthropic, and then OpenAI. And now everyone's tethered to OpenAI, which is kind of not great. But the other thing with Google that I do think you have to come back to that people forget about, they are the leaders in the driverless taxi market right now.
Yeah.
With Waymo.
If that ends up being a real thing, then they are the leaders.
They announced a big expansion to a bunch of other cities next year a couple days ago. So, yeah, maybe the worm is turning in my thoughts.
Tequila?
Yeah. Let's take a quick break. When we come back, let's do a little bit of stack roulette.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Planning for the future is challenging. At Cushing & Dolan, we believe that sometimes the simplest step can make all the difference. A joint revocable trust allows married couples to stay in control of their assets while making sure those assets are distributed properly. Our new guide, The Simplicity of Joint Revocable Trusts, shows how couples can take advantage of both the $13.99 million federal exemption and the $2 million Massachusetts exemption without losing benefits when one spouse passes away. This trust may help you avoid probate, reduce estate taxes, and even provide a step-up in basis that can save your family money when it's time to sell your home or investments. Learn how to make your estate plan work smarter, not harder. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699. Or you can request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Mark Vonner is the CEO of Veterans Development Corporation. His dedication to serving our veterans has made an incredible impact on his family and employees. And he is so proud to be the presenting sponsor of the DAV 5K Boston.
This is Brittany Vonner. I'm a registered nurse who is now working as an assistant project manager at Veterans Development Corporation. Working with my father, Mark, has been an incredibly rewarding experience. Our company is dedicated to serving VA hospitals and veteran communities. We don't just build facilities, we build environments that support healing, resilience, and family. We are so proud to see our work directly impact the lives of veterans and the professionals who care for them. This rich history is why we care so much about supporting great organizations such as the Disabled American Veterans Department of Massachusetts in the work they do to care for our veterans.
Join Veterans Development Corporation in thanking our great American heroes. Please visit DAV5K.Boston to show your support today.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is powered by Circle K Convenience Stores. Circle K is now the official convenience store of the DAV Department of Massachusetts. On behalf of Circle K, thank you, veterans, for all you've done.
Mike, what do you got for me for Stack Roulette?
I've got the Wall Street Journal reporting that teens are seeking mental health help from AI chatbots. Experts say that that's dangerous, which, no kidding. But it ties into...
Non-experts say that's dangerous.
Everybody says that that's a stupid idea, I think. But I'm not surprised either. I think I talked about this back in September. I had been at a conference and talking to a few people who had kids that are older than mine, and them speaking to the fact that, yeah, like our kids wake up, open ChatGPT, and ask it questions that I feel like they shouldn't be asking. Like, what should I do with my day? Like, questions that ChatGPT should have no context for how to answer, and are engaging with it in ways that I just find completely confusing. And so I can't be surprised that they're now engaging it for when they feel bad about themselves or have questions about their lives. And the only thing that I can think of that would be dumber would be asking like a Facebook group about how you look, right? I just think about how bad social media is, and this, as a general idea, seems more damaging to young people than engaging with social media.
Yeah, I mean, I'd say there's like a 5% chunk of me that thinks that we should just find the off switch for the internet and hit it.
I'm at 15%.
Like, I'm just not convinced that we can handle it.
Yeah, as a society.
Nope, not ready.
Like, it just seems like something where it's like, hey, come back in another 1,000 years and give it a go.
1,000 years.
Yeah.
I'm just not sure that we're good at interneting.
Nope.
And it's the evidence is piling up that we're pretty bad at it. Yeah, it's. I don't think that we are capable of wielding these tools successfully.
Yeah, the concerns. Again, who knows what the results to young people are going to be 20 years from now? But like, we have study after study of what happened to young people when they engaged thoroughly with social media when their brains were still developing, and the answers were really bad. And so I just ask parents, like,
the good news is we're using less of it now.
True.
The data's starting to show that turn, especially with young users.
Yes, because they're instead spending all their time on AI chatbots.
Maybe. And this also then gets us to probably the scariest AI report that I saw that came out yesterday from 404 Media, that there is an AI image creation platform and erotic roleplay chatbot that apparently was hacked or somehow left like a bunch of stuff unprotected in its database. And basically what they found out was that everyone was taking like pictures of people in their personal lives.
Yep.
And getting this to generate AI images of them like naked and stuff.
With probably no safeguards around age or any other thing like that.
And like, it was basically anyone from like public figures to people in their own lives, and pretty much like this should not be allowed to exist. Like, most of the time I'm like, okay, like, find a way that you should like regulate it so that it can be used like safely. Quite honestly, this should not be allowed to exist. There is no
using
good
artificial
reason
intelligence
for doing this.
Yeah, using artificial intelligence for this purpose should just be banned. Straightforward, no question about it.
And like, the laws on the book should basically be like, hey, if you are caught doing this, the penalties are significant.
Because you know what,
it's a huge problem.
And don't get me wrong, you can absolutely see the little teenage boy who is going to do this out of a relatively innocent place and ruin somebody's life. Ruin somebody's life.
Yes. And I'm not saying, like, send that boy to jail forever, but I'm saying that the companies that try to offer these services should not be allowed to exist. Like, the downside is far greater than the upside.
Yeah. Yeah, how much advertising revenue can you really pull off of something like this? Good God.
It's just
good luck,
like,
parents.
Again, this is why. Like,
good luck, grandparents.
This is why the portion of me that continues to think the internet might just have to like go away is growing.
Chuck, we would usually just spend the last 10 seconds of the show talking about markets. We need to spend the last 40 seconds.
Hey,
of the
the
show talking about
S&P's
markets.
negative. Holy cow!
The Nasdaq is now down.
Nasdaq's down 0.5%.
What the hell happened?
This market just took a massive swing on Nvidia earnings that were fantastic, and we started the day up 2%. Nasdaq now down nearly 0.25% 2 hours later.
This is wild.
This is a very big swing for markets. Nvidia earnings were fantastic. They were apparently not enough.
Mike, this is a 2% intraday swing on the S&P.
It's a big, big move.
Well, I guess we're going to have something to talk about tomorrow, which is
Nvidia stock now off 0.5%.
What happens in the next 4 hours of trading? Because I have no idea where we are going. Let's take a quick break for the rest of the day. Tomorrow, we'll try to finish up the week. Well, we will finish up the week, and we hope you're along for the ride.